20,000, 126,000.
Morning, everybody. Welcome back to the Opportunistic Trader. It's just after 10 o'clock on November 26th, and now we're joined by Phil Flynn of the Price Futures Group and Fox Business Contributor. How's it going this morning, Phil?
I'm doing good. I hope everybody had a great holiday. It's great to be back. Boy, I'll tell you, every time I take a day off, something big happens.
Yeah,
And
whatever happened to
I took
Thanksgiving week
Friday
being a
off.
quiet,
Yeah.
Thanksgiving week being a quiet, slow up mover was
E-
not the case this year.
No, in fact, November is becoming a November to remember or to forget about, depending on which way you want to look at it, because, we're breaking all the rules. We're supposed to, November is supposed to be a great month in the stock market. Oil prices are supposed to be solid, and we're seeing the opposite. It was kind of funny, the Black Friday sell-off. We had a sell-off like this back in 2014, and back in 2014, though, we had a reason for that type of a big sell-off. I mean, back in 2014 was a famous OPEC meeting where Saudi Arabia said, the heck with it, you guys. We can't come to an agreement. If Russia doesn't cut production, we're just going to flood the market. And that created the price crash, where oil went from 80 down to 40, back up to 60, down to 25. And mainly because we had a market in a global economy that was slowing. We had a glut of oil supplies. Supplies were like 30-40% above average. And then the Saudis, of course, said they were going to continue to try to flood the market to try to put the shale guys out of business. Okay. Now here we go, Black Friday this week or last week, and we had this huge sell-off. And, we really have a different situation. I mean, right now, we don't, hear from the Saudis that they want to flood the market. We want to, we're hearing from the Saudis that they, want to cut production. We're not hearing from the Russians that they don't want to join the Saudis in a production cut. They do. The problem is they're afraid of Donald Trump. And the way that they go about it, from what we're understanding, is that they want to cut production, but they don't want to make a big flurry about it, mainly because they don't want Donald Trump to tweet about it. And Donald Trump, of course, tweeted about oil prices over the weekend, saying, "Hey, guess what? Thank you, Donald Trump. Oil prices are down." Patting himself on the back, and using it as a warning to the Fed. Hey, guys, you guys are worried about inflation, but here you got oil prices falling. Why are you raising interest rates in December? So a lot of dynamics in the sell-off last week. Obviously, we think the commodity fund started to get short on it, but definitely we think it's overdone. And I think that we're starting to see the rebound today. I think the market is starting to realize that it got a little bit out of hand, and it's very possible that what we saw on Friday, if we can close where we are right now or higher on the day, that's probably a capitulation bottom, and $50 is going to be the number to beat for a while.
I'm actually getting a subscriber question, and I find it interesting as well. Are you hearing with how sharp the move has been? Are you hearing any companies, not necessarily traders, but any actual oil companies that have been caught off guard, and based on their production producing too much, and all of a sudden the price drops dramatically, that might be in trouble?
I haven't heard any specific names, but we did hear, in the Wall Street Journal today, a lot of the shale guys are complaining right now that, Donald Trump is not helping us out here. We do know that, we keep hearing that the shale oil producers can produce oil at a cheap price and they're so much more efficient. The reality is that 18 out of the top 20 shale companies are losing money right now. And this
Wow.
drop in price is, this drop in price is going to kill them. We get this false sense of security about these shale companies, about how great they're doing. A lot of them are in debt up to their eyeballs, and a lot of them are pumping oil just to pay back their loans. And this is going to have a devastating impact on future production if these prices don't bounce back. Now, admittedly, a lot of these shale guys did get hedged. Okay, so they're going to be able maybe to add a few more rigs and things, but the the bottom line is that a lot of these companies aren't going to be able to afford this. And while we haven't heard any specific major cutbacks in capex for next year at this point, one would assume that we're going to if prices continue to be down in this area. The shell business is kind of funny. Um, it's the best of times, it's the worst of times, right? It's the best of times because the technology is there. They can produce a lot of oil, and they're changing the world, and they're breaking prices. But it's also the worst of times because their profitability really, from what we're hearing from a lot of the producers, has to be above $60 or $70 for them to start turning a profit. And so if you get the oil in the low 50s for an extended period of time, a lot of these shale guys are going to start shutting down rigs or quit adding to production. And that is really going to change the longer term projections of U.S. production. It was kind of funny. There's so many similarities to what we saw back, when oil prices crashed to $25 a barrel, and everybody said, "Oh my gosh, these shale guys, they're going to be able to make money at, below $30, and prices are going to stay low, and they're going to keep pumping oil." And we found out that wasn't true. We saw a lot of these guys pull back rigs, pull back production. A lot of them went bankrupt, had to restructure. We saw CEOs get fired because they were too optimistic. So we're probably very close to that point again, where a lot of these companies are going to have big problems if these prices don't stabilize.
It's interesting what you were just describing before when I was listening to it. We've been talking a little bit about Bitcoin, how Bitcoin miners have a break-even point of what it is, whether it be 6,000, 5,500. The shale guys as well have a break-even point, and they have to play around with how much they're going to pump based on where we are. And we've had such a dramatic move here in such a short time. Roughly here, $25. Take me through what you were hearing about the move on Friday. What was that? Huge fund liquidation? Was it something more than that? And also, just on the day, there isn't as much liquidity that entire week, let alone Friday.
Yeah, we heard some algorithms kicked in. I mean, the case behind the sell-off was simply this: that there was a perception in the market that Chinese demand was slowing, that the OPEC producers were afraid to announce a production cut because they didn't want Donald Trump to get mad at them. And so the market lost confidence that OPEC is going to be able to come in and step in and cut production. Actually, that was confirmed by an article in the Wall Street Journal, which basically said that OPEC was looking to do a clandestine cut production, but not really announce a big production cut. And and so Donald Trump doesn't, go off the handle. So there was a perception that OPEC has lost control of the market. They're afraid of Donald Trump, that they don't have the political wherewithal to cut production. I don't think that's true. But now we might have to look at their actions as opposed to their words. We might have to start counting the actual barrels coming out of OPEC to see if they're actually going to cut production. So this is going to be an issue that we're going to have to deal with going forward. But getting back to the Bitcoin situation, you're right. I mean, the Bitcoin situation, we're always, the companies that sell the software, they're losing money because, nobody's going to be buying software if you can't make money. If it costs more money to mine a coin than it does to actually get it, you're going to stop that process. So it is kind of the same thing in the shale oil. You get to a certain point where you're not going to be able to keep drilling because you're losing money on every barrel, and the banks are not going to give you the money. And let's face it, most of these companies are at the mercy of the investors right now. And if the investors are a little bit concerned the prices are too low, their source of funding to continue drilling is going to dry up.
Yeah, absolutely. Yeah, a lot of fascinating stories here. What about on the equity side? You were basically S&P's strong day right here, up 1.5%. Nasdaq's up 175. We're
Mm-hmm.
basically at flat on the year, pretty much for the S&P.
Uh-huh.
What are you hearing based off of that move? Last week was a big sell-off there as well, but good start to the week here.
I let my wife go shopping. So I think that, the
There were
Black
some
Friday
big
sales,
numbers there, Black
I
Friday.
know, Black Friday, I'm telling you, everybody shopped like crazy. And that I think is more indicative of the economy than, some of the doom and gloom that we've been hearing from a lot of people. The US consumers are in the best shape they've been in a long period of time. And they are getting a break in gasoline prices. Their job prospects are the best, record unemployment, and that's going to show up in the numbers. And I think we're seeing that, in the Black Friday sales. And I think that's a positive thing that could even be a mood changer for the marketplace. So definitely something that's good. But you also, of course, you had the oil stocks. If they were getting really beat up last week in the sell-off, a lot of the energy names, they're starting to stabilize a little bit, and people are looking at the big picture there. So the big oil companies are coming back, so that should help as well. But when you look at the stock market going into the end of the year, there is a lot at stake here at this G20, because a lot of the mood uh, in the market has been hurt by the Brexit negotiations, for one, and number two, the concerns about the Chinese trade war. If we get to the G20 next week, and it looks like the U.S. and China is going to get a deal, you're going to see a December to remember when it comes to a price spike. You're going to see a major, major price spike in stocks, because that is one of the main factors that has been holding back the market. The concerns about this trade war and what it's going to do and its impact long term and short term. If it looks like we're moving towards a deal, that's it. But I mean, what we've seen in the sell-off is pessimism that a deal can be reached, and that's been one of the major factors.
Well, that's a
You've had,
good point. You bring up
yeah,
two things here. So on Thursday
yeah,
we have the Fed minutes, and we'll keep an eye on that. But really, this G20 meeting is going to be a huge event. And like you said, if there's optimism that a deal is there, then that's going to be a huge move higher. And at the same time, if there's pessimism that these guys are just never going to get their act together, that's going to be a negative. What's the timetable, as you know it right now? When can we start to see some news leaking out about G20? Is it going to be Friday, or is it really a weekend event, and then it's going to be a big gap over the weekends?
I hope it starts coming out Friday. I mean, usually if you're close to a deal, you'll start getting news early, some positive comments from the players involved. But usually for this type of deal, it's going to go to the last minute. When we look at the previous deals, when it's come to the deal with Mexico and Canada on the free trade agreement, it went past the the deadline. But you knew as you were getting close that they were getting close to a deal. So I think it's going to be a situation where we're going to be stuck to the phone till the very last minute and stuck to the computer. Um, and um, but we should get a really good idea of how the winds are blowing by Friday. And so we hope that we definitely are making some progress by then.
The one thing that we got to say though is you got to be careful with what you hear, especially at the beginning, because remember, like for instance, President Trump and French President Macron, when they met just under a month ago, they were holding hands. They were literally touching each other's knees, saying everything's great, and then literally about 20 minutes later, they got on the airplane and they started both talking badly about the meetings and how things,
Mm-hmm.
and so that was a change. So it'll be interesting to see how the initial headlines are met if that's the continued theme. But it's definitely, as you said, that's going to be a huge event for the first week of December, market price action based on how it's perceived, how things went. Because if it is perceived that things are moving in the right direction, that will be a very big positive coming in the face of a very, very ugly October, November thus far.
Absolutely. It's going to be fun. It's going to keep us busy for sure. But I think you're absolutely right. I think it's going to be the pivotal event for the market. oil, gasoline, you name it, should be pretty exciting. Now the big question is, does the Fed have enough courage to raise interest rates and face the tweet, the presidential tweet?
Mm.
I don't know. What do you think?
I think they have enough courage for this one because they've telegraphed it pretty well. That
They
said,
have.
it'll be interesting to see the comments that go along with it. Like I said, actually, so we have the minutes coming up on Thursday. They've really telegraphed this December hike. So if they were to not hike, that would be kind of interesting itself. The perception would almost be that they're bowing down to the president, which is also a bad thing. So
Right.
I think that
Exactly.
they're going in December, but they'll probably hint towards being very, very, very data dependent and very nimble. Hey, they could potentially even cut
Right.
rates. That's the whole point of
Right.
raising rates, is
Right.
that it gives them room to cut rates. But right now, it seems like the projection is 2 rate hikes in 2019.
Right.
We'll see what the actual. It'll be interesting to see how the market trades in mid-December after they hike. If it's
Hmm.
dovish and they start taking out some of those rate hikes. So,
Right. Got it. Awesome.
well,
Um,
Phil Flynn, thanks a lot
you
for
got it,
that
sir. Thank you.
energy talk. We'll talk with you
All right.
later in the
Good.
week.
I'm looking forward to it. Thank you.
Thanks a lot. So
Bye
that's
bye.
Phil Flynn, Price Futures Group and Fox Business Contributor, joining us.